Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 3rd of May. Today, all eyes will be turned to the FOMC rate decision. The forecast is for the committee to keep borrowing costs unchanged, something supported by market pricing, which indicates a 95% probability for no action. Bearing also that this meeting does not include updated forecasts or a press conference, market action will most likely come from the language of the statement accompanying the decision. Recent comments from various Fed officials are in line with the dot plot, which points to another 2 hikes this year. However, these were before the nation's core inflation data for March revealed a slowdown. From a growth perspective, economic activity slowed markedly in the first quarter, but according to the March minutes, the committee views some of this softness as transitory. On the bright side, the labor market appears quite robust overall. Bearing this mixed data in mind, we expect the Fed to maintain a more or less balanced tone, with risks tilted towards a slightly more cautious narrative than previously. Before clearly communicating that further near-term normalization is on the cards, policymakers may prefer to wait for a rebound in the data and even some clarity surrounding fiscal policy. In case the Fed disappoints investors looking for strong hints regarding a June hike, the dollar could come under selling interest. Dollar yen has been trending higher since the 18th of April, but the trend shows signs of weakening momentum recently. Now the rate is trading between the support of 111.90 and the resistance of 112.35, and we expect it to continue trading near that range heading into the FOMC decision. In case the Fed adopts a more cautious stance than previously, the pair may slip below 111.90, initially aiming for the next support of 111.40. Switching to the daily chart, we see that the pair continues to trade within the downside channel that has been containing the price action since the start of the year. The proximity to the upper bound of the channel, combined with the slowdown of the latest recovery, amplify the case for the pair to turn down again soon. Now moving to New Zealand, overnight the Kiwi dollar came under buying interest following the release of the nation's employment data for the first quarter. The report was quite strong, with the unemployment rate unexpectedly dropping and the labor force participation rate rising. This suggests that the labor market continues to tighten at a rapid pace. Coming on top of the solid inflation figures for the same quarter, we think that this data enhance the case for the RBNZ to appear less dovish than previously when it meets next week. New Zealand dollar, US dollar edged up on the employment data, breaking above the resistance now turned into support of 0.6940. The latest recovery started from near 0.8080, which happens to be the lower bound of the longer-term sideways range between that zone and the 0.74 territory. Therefore, there is the possibility for the pair to continue trading higher for a while, at least heading into next week's RBNZ gathering. We expect the bulls to challenge the 0.6980 resistance soon, where a clear break is possible to target the 0.7020 hurdle and the downside resistance line drawn from the peak of the 21st of March. As for the rest of today's highlights, during the European Day, the UK construction PMI for April is expected to have declined somewhat. However, following the unexpected surge in the manufacturing index for the month, we see the risks surrounding that forecast as skewed to the upside. In case of a positive surprise, the pound could come under renewed buying interest. From Eurozone, we get the flash preliminary estimate of GDP for the first quarter. We also get the bloc's PPI for March, as well as Germany's unemployment rate for April. As for the US data, we get the ADP employment report for April and the ISM non-manufacturing PMI for the same month. The ADP figure is expected at 190k, a solid number, while the ISM index is expected to have risen. Even though the dollar could gain on this data, its direction over the next couple of days may primarily be decided by the FOMC signals. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.